Whoa, what on earth is going on with the banking system around the world? If you've been following us or watching the news or just keeping your eyes open, you would have heard of a number of banks failing over the past week and a half or so. It started off with Silvergate, then it went to Silicon Valley Bank, then it went to Signature Bank, and now we've got more and more banks that are showing weaknesses in their balance sheets and in their liquidity. The US government has come in to try and bail them out, although they're not calling it a bailout, they're calling it a backstop. Okay, so which in other words is a bailout. So what on earth is going on with the banking system? What can we expect in the immediate and short-term future? My name is Wasim from Breakout Solutions and Decrypting Crypto. Welcome to the channel, and today I'm going to show you what has happened, what is currently happening, how we got here, and what could be the future and what could be the solution. So stay with me, and I'm going to get straight to sharing my screen and show you guys some headlines that are really going to show you exactly what the big guys out there are saying. All right, so first up, we've got BlackRock CEO saying more bank seizures could occur going forward and inflation to persist. Another headline from BlackRock is also saying BlackRock's Fink says SIVB failure shows cracks in the financial system. It says the consequences could spread to more banks. Inflation likely to stay 3.5 or 4% for years to come. Okay, so he's not talking about transitory or end of this year. He's talking about years of inflation between 3.5 and 4%. Now you got to remember the Fed's goal, the RBA, wherever you are in the world, every country has around a 2% inflation target. And right now, depending where you are in the world, your inflation is in America is around 6 to 7%. Australia is the same. Some countries is in the triple digits, like Zimbabwe, Turkey, Lebanon, Venezuela. Some of these countries have triple digit inflation. There's some countries, a lot of countries have double digit inflation, and some countries have high inflation in between 6 and 10%. Another one talks about SVB collapse may be the start of slow rolling crisis, warns BlackRock's boss. So Larry Fink tells investors more shutdowns and seizures in US are possible and predicts inflation and interest rates to rise. So he's actually predicting that there's going to be more interest rates happening, hikes happening. This is from NASDAQ.com. BlackRock cuts stake in SVB Financial Group. So the Silicon Valley Bank, BlackRock had exposure to it. In fact, they own 4.76 million shares in the bank, and which represented about 8.1% of the company. They started selling off as early as 1st of February 2022. Now, I'm going to talk about this and why the big guys and the guys at the top and ultra rich and the billionaires and these large companies have already started withdrawing their funds out of these banks and how they've started this bank run. We're going to talk about this. I'm going to show you some evidence on that in a few moments. Next, we've got Credit Suisse. So Credit Suisse is another bank. There was talk about it and being in trouble earlier on. Like I think it was earlier this year or late last year. Don't quote me exactly when we did report on it. Just don't have my timeline correct right now. Credit Suisse shares fall to all-time low as bank announces it has found material weakness just hours after Wall Street experts predict that it could be the next fall after SVB. So how does a bank all of a sudden find material weakness in their balance sheets? Have they not been looking? Have they been turning a blind eye? Or have they just been taking too much of a risk with people's investments? So this is exactly what we're going to talk about as we move forward in this video. Moving over to Twitter right now, we're going to look at, so just in trading halted for French banking group BNP Paribas after stocks plunged 8%. Now, this was literally 9:07 p.m. yesterday. It is 9:48 a.m. So this is like just over 12 hours ago from now that this was actually announced. So all the information I'm giving you, most of the information I'm giving you is up to date within the last 24 hours. And just remember, guys, by the time you watch this episode or watch this show, things may have changed. So the information I'm giving you right now is up to date to now, but this is a breaking story and things are changing all the time. So the information I'm giving you could change by the time you watch this video. The next one we're going to look at is another Disclosed TV, where they speak about Republic Bank has been downgraded to junk by S&P. Now, junk stocks are basically bottom of the line stocks. So S&P, they rate stocks, and junk stocks are the lowest stocks that they have. So now, the First Republic Bank is now a junk stock according to the S&P. More banks have halted stocks. So this is the Wall Street Journal, and they're talking about PacWest Bancorp, Zions Bank Corporation, First Republic Bank, which I just mentioned, Regional Financial. All of these banks have halted stock trading. And you can see here how much they've lost: 21%, 25%, 61.83%, and 7.1%. And they talk about crypto and Bitcoin being volatile, while these banks have lost huge amount, 60% loss in 24 hours. Now, this is just a systematic collapse, a systematic crash of all the stock market. And this is a contagion that we still have no idea how far and wide this is going to reach. Here is a full list of banks that have halted trading. Okay, you've got Western Alliance Corporation down by 47%, PacWest down by 21%, First Republic, which we mentioned before, 62%, Zion Corporation down by 26%, Ocean First down by 14%, Customer Bancorp down by 24%, East West Bancorp 17%, Metropolitan Bank Holdings down 44%, Regional First Horizon Corporation common stock down 20%, Regional Financial Corporation common stock down 7%, Commercial Incorporated common stock down 27%, Bank of Hawaii Corporation common stock down by 18%, and the list just goes on and on and on. Matawaca is down by 4.5, another one's down by 6%, United Communities 6%, 11%, 16%, 17%, 6%, and another 4%. All of these banking stocks have now halted trading according to NASDAQ's website. All right, so I'm going to stop sharing my screen here, guys, and just go into a little bit about why this is happening. So why is it that all of a sudden all these banks are starting to have this contagion? Why is it that once one bank falls, it becomes like a domino effect and more banks start falling? And the reality is, and the answer I should say, is simply because that's the way the system was designed. Now, what I do recommend, if you haven't read this book, please go out and get yourself a copy of it. It's actually a free version on YouTube. If you look hard enough, if you want it, send me a message. I'll send you a link to it. But look up The Creature from Jekyll Island by Edward Griffin. Okay, The Creature from Jekyll Island by Edward Griffin. This book is an absolute eye-opener. It talks about the creation of the Federal Reserve. It talks about how it is a cartel by 4 or 5 banks that came together in 1913 to stop competition amongst other banks. And he actually talks about how many banks there were before 1913 in America and how many banks there were after 1913. He goes through and discusses how this was sold to Congress, how it was sold to the American people, because they weren't going to accept the word cartel. So they called it the Federal Reserve Bank. But it's neither federal nor is it a reserve, and it's really not even a bank. All that they do is control the banking sector so they can dictate to Congress and to politicians what they should be doing. Every time a bank comes to fail, they run to the Congress. They tell them, hey, this bank can't fail, because if this bank fails, it's going to have a systematic effect on the economy. People are going to lose jobs. People are going to get hungry. It can't look good for America. The rest of the world is going to lose faith in us. So then Congress is put into a corner where they have to bail out these banks, which is exactly what we're seeing right now. And on top of that, if you have a look at what Ron Paul actually said, so this is Ron Paul. He's the author of a book called End the Fed. Okay, and he's a federal representative, and what he says, he goes, who will head a subcommittee overseeing the Federal Reserve in the new Congress, called central banks a cartel and said that it had monopoly control over the US dollar. I think we should start ending the Fed by allowing competition. I don't like the idea that they have monopoly control. It's a cartel. They get to print money. which is exactly what they do. So when you understand why America and the world is in debt, they are in debt to central banks, which means that whenever governments need money, they go to the Reserve Bank, they go to the central bank, whatever it's called in your country. In America, it's called the Federal Reserve. In Australia, it's called the Reserve Bank of Australia. These guys print money, lend it to the government. The government then pays out to whoever they need to. Then the government goes out and sells bonds to investors, giving them an interest yield in return. So it becomes a circular debt creation system. And this is what this creature that Edward Griffith talks about. He talks about the creature that they created back in 2013. And this is a hungry creature. It needs to be fed. And the way it gets fed is by creating more and more debt and putting more and more countries under pressure. The IMF was created because of this. The World Bank was created because of this. And they all have the same goal: to keep the world getting further and further into debt, so that this creature keeps being fed and people keep being enslaved to this financial system. So this is why, this is one of the reasons why we're here right now. This is exactly what the Federal Reserve banking system is. Now, a lot of people don't even understand how the banks work and what fractional banking is. So I found a very short video on YouTube. It's about a minute long. I'm going to play it for you right now. I have downloaded it. And it's just 1 minute video that will show you what fractional reserve banking is and how it works. So without any further ado, I'm going to press play on that, and let's go.
Banks are allowed to create money through a system called fractional reserve banking. Whenever you deposit money, the bank is legally required to keep a certain percentage of it for safe, but can lend everything else. Here's an example based on a 10% reserve requirement. John goes to his bank and deposits $1,000. John's bank keeps $100 and lends the remaining $900 the month. There is now $1,900 in the financial system. John's $1,000 deposit and Mike's $900 loan. Next, Mike uses the $900 to buy a laptop from Karen. Then Karen deposits her $900 at another bank. The bank gives 10% and lends the remaining $810 to George. There is now $2,710 in the system. John's $1,000 deposit, Karen's $900 deposit, and George's $810 loan. This goes on and on until John's initial $1,000 is turned into approximately $10,000. Believe it or not, commercial banks actually create more money than central banks.
So this is how fractional reserve banking works. The reserve banks creates money out of thin air. They lend it to governments. Governments then give it to commercial banks, and they lend or pay off their bills and etc. With all the things they have to do. They fund the military, they fund healthcare, they fund all of this stuff, which is why all the world is in debt. Now, the world is $303 trillion in debt. I'm going to show you guys in a few moments what that looks like. So when you understand how this works, your $1,000 deposit can make the bank, can help the bank create $10,000 of money out of thin air. Now, in Australia, there is no reserve requirement. In other countries, there is a reserve requirement. They gave a 10% example in that video. So that means when you put your money in the bank, that dollars on your bank account is not real money. These are IOUs by the bank. So this is the bank saying, I owe you $1,000 that you've deposited, but I'm going to take that $1,000 and I'm going to invest it or lend it out and do whatever I want with it. But if I lose it, it's not my fault, and you could be held. You could be left with the empty bag. Now, I know there's insurance, and we're going to talk about insurance. We're going to talk about the FDIC. We're going to talk about insurances around the world and what these insurances actually mean. So let's move on and actually go now into what happened in 1971. So up until 1971, we had the gold standard. Now, in 1971, Richard Nixon went up on TV and said that he's removing the convertibility of the US dollar from gold because the Americans were printing way too much money, that they had more dollars than gold when they should have only had enough dollars printed that were backed by gold. So let's go to this website. The website called WTF happened in 1971.com. You can go on this, you can check it out yourself. There's so much information on here that shows you the moment the gold backing was removed from currency and we moved to a complete fiat currency, we started going downhill. The economics of the whole world started going downhill, not just America. So you can see here the productivity back in 1972, people were getting paid about 90% versus the productivity. So it was a pretty even, productivity versus wages. But since 1971, productivity has gone up by 246%, while compensation, i.e. wages, is only gone up by 115%. This is why we are working more today than ever before and making less money. Real GDP, you can see that income gains, okay? You can see here that the top 95 percentile and the gap between them and the median percentile and then the 20th percentile. There is another one. So this is, again, the decline in wages over the past 50 years. There's one that I really wanted to show you, which is just down here. So this is the household income since 1970 to 2010. Now, back in 1970, 47% of households had a dual income. So both the husband and the wife were working. 38% had only the husband working and 2% had only the wife working. Now, since then, we have got now 66% of households where both the husband and the wife have to work. So it has to be a dual income family just to be able to survive. While only 21% is now a husband only working and 7% is wife only working. If you have a look at this website, look at the cost of living back in 1971 to what we have now. Inflation taking hold. This is 1970. This is the inflation curve between 1970 and 2020. Cumulative inflation, we're looking at this, from 1970, it was 306%, to 2000, 326%. All of this happened when we went off the gold standard. We need to understand this. The money today is not backed by anything other than debt. This creature that is created through the Federal Reserve and central banks around the world, and commercial banks being able to print money out of thin air, has allowed them to create a very, very hungry monster that just wants to continuously consume debt and consume money. And the only way they can do that is by increasing the debt and getting people more and more in debt, increasing taxes and increasing inflation. Okay, now the next thing I want to show you is, guys, and I spoke to you guys about this. I said that this is something that has been planned. They've known about this all the way back from the 8th of November, 2022. Now, we spoke a little bit about this recently in our previous live streams, and I'll show the video of this. I'm going to show you another video from a YouTube channel called Redacted. Now, you can actually find this actual whole video, 3.5-minute video, 3.5-hour video on the FDIC website. You just go to the FDIC.com, whatever the website is, I can't remember off the top of my head. Look it up, go to their webcast, go to the meeting on the 8th of November, 2022, and get the video. I've actually downloaded the video and kept a copy of it for myself, just in case it gets taken off the FDIC website. But let's have a look at what they actually said back then. Now I'm going to play here what Clayton Morris is saying.
Watch, this is the FDIC.
How would we use targeted guarantees to allay concerns about excess cash use? There's a lot of questions here. And so, there are a lot of things we've been thinking about, and what we want to hear from you today is what you think the priorities would be in order to go about setting expectations appropriately in public about how we would execute Title II, so that if and when we do have to have that announcement on Friday night, ideally Friday night, that people are in a position to receive it, understand it, and say, yeah, that works. And we can see how this will happen. Of course, there will be doubters, but there's a lot of things going on.
So you can see there that they've actually said that they're going to release this information on a Friday night and let the people know about it, and they come up with the data and come up with a solution. And then after they come up with a solution over the weekend, they will be able to calm people's nerves. Now, why did they do that? Why did this information come out on a Friday night? Because banks are closed on Saturday and Sunday. So the panic that would have happened, the bank runs that would happen, they had to stop because people can't go to the banks. Okay, so that would give them 2 days to come up with a solution and say, we're working on a solution, and they come out on a Sunday evening or a Monday morning with a solution to calm the public, which is exactly what happened last weekend. Okay, now I want to move into what happened with Signature Bank, so you guys can understand what happened with Signature Bank, because that was the third largest bank collapse. So Silicon Valley Bank was the second largest collapse in America's history. Signature Bank, it was the third largest collapse in America's history. So why regulators see Signature Bank in third biggest bank failure in the US? So on Friday, Signature Bank customers got spooked by the sudden collapse of Silicon Valley Bank and then withdrew more than $10 billion in deposits, a board member told CNBC. The run on deposits quickly led to the third largest bank failure in US history. Regulators announced late Sunday that Signature Bank was being taken over to protect its depositors and the stability of the US financial system. Now, if you've been following me on Facebook, you would have seen a post that I did that these banks were regulated by the Fed. They were seized by the Fed because of interest rates by the Fed, and then depositors were bailed out by the Fed. Okay, so I think part of what happened was the regulators wanted to send a very strong anti-crypto message, said board members and former Congressman Barney Frank. So basically what he's saying is Signature Bank was pretty much the last standing bank that was crypto friendly, and they had on-rails for crypto and off-rails for crypto. They were already reducing the exposure to crypto. If you've been watching us, we spoke about this, I think back in February or late January, where Binance was saying that some people can't withdraw their crypto to fiat because of Signature Bank. And now the Fed wants to make an example of it, because if you've also been watching, we'll be talking about Operation Chokepoint 2.0, which is they're trying to get as much liquidity out of crypto and make it harder and harder for people to get in. Because even the IMF, and if you follow me on Twitter, you'll be able to see a tweet that I shared, the IMF has come out and said that Bitcoin and crypto is a threat to the traditional financial system, which is that's what we've been saying. This is exactly why Bitcoin was created. So what happened just before the SIVB collapse? Okay, what you guys would have seen in that video and the video we showed on Tuesday is they were going to tell institutions that this is happening so they can actually react before they let the public know. So now we know that Peter Thiel, who is one of the founders of PayPal, withdrew cash. I think it was up to like $1 billion, or drew a large amount of cash. Or he drew all his funds from Silicon Valley Bank, according to Bloomberg. So his VC fund took action after encountering problems with transfer. Per the report, the fund had no cash with SVB by Thursday morning, Bloomberg reported. So this is a very rich guy that saw what's happening, took all his money out before the bank collapsed. Okay, another report has come out and said, there's a congressman saying that he will be paying all the donations that he got from the Silicon Valley CEO to charity, okay? Because obviously these banks, they lobby politicians by giving them a huge amount of so-called donations, in other words, bribes. But now he's saying he's going to give it to charity. Now, my question to him is, why aren't you giving it back to the bank so this can go back towards the depositors instead of making the government pay out these depositors, which is going to cause more inflation on everybody else? Another report from the Daily Mail, this is talk about there's no bailout, talks about that bonuses were actually paid out hours before the bank failed, and we actually spoke about this. All the 8,000 something employees got paid anywhere between $12,000 and $140,000 in bonuses hours before the banks failed. All right, next one that we're going to be looking at is SVB executives sold $84 million in stocks over the past 2 years, and they sold a huge amount just in February. So something like $3.6 million was sold by the CEO in the past, in February alone. So they knew that this was happening. This is what happens over and over again. If you read this book, you will see example after example after example when there has been failures, whether it's the railroad in America back in the 70s, whether it's banking sectors that have failed in America. Every single time after the failure, you see that the executives were actually selling stocks before the public knew. So they cashed out so the public can be left with the empty bag. And I will also share this one, which shows you guys more that these firms were already taking money out. So Silicon Valley Bank pledges $74 million to Black Lives Matter causes. So they've been donating a huge amount of money. Where's this money coming from? Another one is a Israeli bank withdrew $1 billion from Silicon Valley Bank right before the Fed seized it. Why are these guys able to withdraw such huge amount of funds just before the Fed comes in? All right, so this is showing me that this is all planned and there is a reason why this is all planned. And I'm about to go into why this is all planned. So before I do that, we already know that Biden already said that he knew that this was happening. So I'm going to play this quick Twitter video where he actually said, I knew about this last week. I told my team to work on it, and they did, and we've come up with backstop. So let's see what Biden's been saying here.
Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs, small businesses, and the banking system overall, I instructed my team to act quickly to protect these interests.
So you can see there that he said last week when we learned about these problems with the banks, okay? So it wasn't just one bank. They've known about this and they've been speaking about this. And I showed you guys a clip from November 2020. So the next thing I want to speak to you guys about, the reason why this is all happening is if we go back to the story to what I was saying before, if these banks or the Fed is a cartel, like this book actually says, if the Fed is a cartel to protect the large four banks, okay, and these large four banks then dictate to Congress what they do by getting them more and more into debt, what we're seeing right now is exactly that. We're going to show you guys how much debt the American government is actually in. We're going to talk about how much money supply there is actually is, what that looks like, and how much actually cash there is in the system. All right, so let's go back to me sharing the screen. Okay, so this is the usdebtclock.org. Everything I'm showing you guys is verifiable. We will try to put all the links in there. If they're not, we can't for whatever reason, reach out and I can send you links to all of these articles and all the sites I'll be speaking to you guys about. So this is usdebtclock.org that shows you how much the US debt is and a few other information. So it shows you the national debt is $31.617 trillion. Okay, the revenue is only 4.6 trillion, and it just keeps going. You can look at income tax revenue, payroll tax revenue. You can look at the total interest. US total debt is $94 trillion. Okay, and the money supply. So this is the money supply. There's $21 trillion in the money right now. Currency and credit derivatives right now. Okay, all of this information is right here on this website, and it all comes from the Fed Reserve's website. So this is something that you can look at. Okay, now when I say to you guys the US is $31.67 trillion in debt, then what does that actually look like? So let's have a look at how much $31 trillion actually looks like. So this is a website called visualcapitalist.com. Okay, and come on, baby, load up. So $20 trillion of US debt visualized using stacks of $100 bill. Now, this was back in 2017. So this is a 5-year-old article. Now, since then, we're $31.6 trillion debt, as I showed you. So now, this is a $100 bill, $1,000 bill. This is what $1 million looks like. This is what $100 million looks like on a pallet, and a couch is worth 46.6. And the couch is worth a cool $46.7 million too. Okay, so that's $1 million. This is what $1 billion looks like. This is what $1 trillion looks like, guys. Now, if we have an aerial view, so this is a human, this is the size of a normal human standing next to this. This is an airplane over here, and this is the actual White House. So this is how much $1 trillion looks like if you were to print it out. Now, the US is $31.6 trillion. Back in 2017, it was $20 trillion in debt. This is what $20 trillion looks like when you look at it versus the Statue of Liberty. Okay, so much higher than the Statue of Liberty. So you want to actually multiply this by 1.5, but a little bit more than 1.5, but say 1.5, which is what right now the US debt looks like. The world is in $303 trillion in debt. Who on earth are they in debt to? They are in debt to central banks. They are in debt to these guys that print money and force governments to go further and further into debt. So imagine 303 of these, okay, massive fields of money. That's how much the world is in debt. Now, the next question is, why is this happening? Why are they spooking people, and why is there now a huge bank run and banks collapsing, especially the smaller banks? The large banks aren't going to collapse. They're too big to fail. They've already proven that they're too big to fail, because if they do get in trouble, guess what happens? The money printer gets turned on by the Reserve Bank. The Congress and the government start to borrow money to bail out these banks, because these banks are too big to fail. If they fail, we would have catastrophic results in the economy. People would go hungry. There'll be hunger. There'll be famine. There'll be huge results. So they're not going to fail. But if we go back to thinking about these banks wanting to be a cartel, where the top 4 or 5 banks are the ones that control all the money, this is exactly what's happening. The FDIC is supposed to insure banking deposits up to $250,000. However, the FDIC is insuring $22 trillion worth of deposits, but they only have $202 billion of funds. So if the banks fail, the FDIC doesn't have enough money to pay it out. That's number one. Keep that in mind. Number two, now people are moving all of their funds over to the large banks. So JP Morgan and other big US banks are flooded with new clients post SVB collapse. So JP Morgan, Citibank, and other large lenders are now saying that they are trying to manage all the influx of money coming into them. So if you think about why this is happening, this is choking out the smaller banks, the competition. So these smaller banks aren't insured by the FDIC. Only the large banks are insured. So people now want to move their money to what they think is a safe haven. Now, once these guys control the money, what do you think is going to happen? They're going to do whatever they want. All right. Now, another thing I want to get you guys to think about is right now, there's $21 trillion in the financial system. Okay. However, if you look at how much actual cash, physical cash, notes and coins, etc., are in circulation, it's only $53 billion. $53 billion, and I can show you guys the information on that, which means less than 1% of the money in the financial system is actually in cash. So if we have a crash of all these numbers that are just on a database that are not real money, it's actually fake money, just numbers on the screen, then what's going to happen? People aren't going to have any money. There's only $53 billion in cash out there. So this brings me back to the main question and the main thing that I've always been speaking to you guys about. People are going to come back and say, but Wasim, this is something that has happened with FTX, it's happened with Celsius, it's happened with Voyager, it's happened with BlockFi, and now it's happening to the banks. So don't tell me crypto is any better. And the answer to that is you're 100% correct. It did happen to FTX. It did happen to Celsius. It did happen to Voyager. It did happen to BlockFi. It happened to all of these, and it's happening to the banks. But what does Voyager, FTX, Celsius have in common with the banks? They are both centralized systems, meaning that we as the average person cannot see behind closed doors what they're doing. If we can't see what they're doing behind closed doors, they can do whatever the hell they want with our money and our deposits, which is exactly what FTX did, exactly what Celsius did, Voyager, BlockFi, all these so-called crypto businesses that failed did the same thing that the banks are doing. So they ran like banks and they failed. They failed first because they had no insurance and they weren't too big to fail. So governments let them fail and let the depositors hold the empty bags. Banks are exactly the same, but governments are trying to back them. But it's going to get to a point where they can't back them anymore. And what is that going to lead to? This is the question. Where is this all leading to? Okay, and I'm going to answer that in a moment. So when people say this to me about crypto, I turn around and say, you're 100% right. However, these are not a representation of crypto. These are services or companies that provide crypto services. So if a stockbroker collapses and loses all his customers' funds, okay, because of bad management, does that mean the stock market is the one that's wrong, or is it this stockbroker that had the bad management? All right, I want you to think about this. Is it the stock market? If I was a stockbroker and I did some shady dealings, okay, and then my company failed and I lost all my customers' funds, okay, is that really going to have a huge effect on the stock market? Now, depending how big I am, it will. But eventually the stock market will come back. Crypto is all about decentralization. Decentralization means there's not one single entity that controls everything. Bitcoin is a decentralized network that is spread all over the world and nobody can actually control it. No governments, there's no CEO for Bitcoin. There's no foundation for Bitcoin. It is a completely decentralized currency that nobody can control, that you can send all across the world. The same as like gold, for example. Gold can't be controlled. You have your own gold, no one can take that off you. Silver, same thing. I'm not against gold, I'm not against silver. However, if you look at what Bitcoin has done over the past 2 days, it has gone up about 20%. Okay, so the answer to all of this is decentralization. It's removing the power from those few that control it, and they're doing shifty and dodgy stuff and making us pay the price. All right. Now, if the smaller banks collapse and the larger banks go into control of all the money around the world, what do you think is going to be the next step? This is paving way for CBDCs. And we've spoken to you guys over and over and over again around CBDCs and what they mean and how this is going to be a tool for control and complete authoritarianism. Okay, if CBDCs are rolled out and people start using it as the main way of currency, and we have like the everything app and all that kind of stuff, this is when we are in complete control of these governments, because they can program the money, where we can spend it, how we can spend it, how long the money lives for, if it can expire, etc., etc. So educate yourself. What I'm doing, and this is not financial advice, I'm telling you what I'm doing for myself. I'm debanking myself right now. I'm taking cash out of the bank so I can live off. I'm buying everything with cash, okay? And I'm investing a portion of my income into long-term stable assets, such as silver, gold, and Bitcoin. If you know a lot about me, you know exactly where I'm investing in and what I advocate. I'm not giving you guys financial advice. This is what I'm doing for myself. You need to go out and educate yourself so that you don't get caught out. That's it from me, guys. Thank you very much for watching, and we'll be back with you tomorrow with another video. And as I always say, stack sats and sack banks.